Well, let's see. I think obviously the market's trading with a degree of apprehension ahead of whatever the US administration decides to announce tonight in terms of its response to developments in Hong Kong vis-a-vis the passing of the national security law. Our sense is that if all we see out of that is President Trump saying that there are going to be certain sort of sanctions against perhaps Chinese business interests in Hong Kong and some individuals, potentially Chinese officials, that's really not going to frighten the horses, I don't think, as far as what happens with the offshore and later tonight. So our sense is still that 720 still looks to be the line in the sand, doesn't it, at the moment? And unless, we get some sort of surprise sort of shock and awe announcement, particularly with respect to, say, the Phase 1 trade agreement, which would bring with it the prospect of new tariffs and potentially, China's retaliation in the form of accommodating market pressures for a still weaker yuan, then, we think we're probably going to be in this kind of 710 to 720 range for the time being. And here we are sat pretty close to the middle of that as far as CNY is concerned. So let's see what tonight brings. But, we certainly are off the highs as far as dollar CNH and dollar CNY is concerned. And I think that makes some kind of sense.
Ray, are you surprised by the strength that we've seen in the Hong Kong dollar amid this chaos at the upper end of that band versus the greenback versus the USD?
Well, I think the more important thing is probably to look at what's happening with the forwards. So if you look at something like the 12-month outright forward rate for the Hong Kong dollar, that has been where most of the response to political developments has really shown up. That's moved from about, 777 up to 783, 784. So quite big moves there. I think the reason that the spot has stayed where it is, it's still actually been quite an attractive carry trade in terms of being sort of long Hong Kong dollars versus the US dollar because of the relative money market rates there. So that's the reason it's been pinned down. And we have seen a little bit of evidence of unwinding of those pressures. But I think that, realistically, whatever happens, we aren't going to see a break of that peg, certainly not in the near term. And the near term I would measure as months and quarters at least. So I think for the time being, all the pressure is going to be in those sort of far-dated forward markets.